Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of finance. And today we're looking into Appian Corporation because they just announced a rather interesting plan that might just repurchase some of their own stock. Sounds like a puzzle, doesn't it? So what exactly is Appian up to? Well, they've been busy behind the scenes. On August 29th, their board of directors decided it was time to buy back some of their own company stock. Think of it like a company saying, hey, we think our shares are a good deal, so we're going to buy them ourselves. This isn't just a small casual buyback. They've authorized a program to buy back up to a whopping $10 million worth of their own common stock. Now, this is a significant move that signals a few things about how the company sees itself and its value. This program is kicking off right away and will be in play for a good while, running until August of 2020, time to execute their plan. It's important to understand that this doesn't mean they have to buy $10 million worth of stock. It's a ceiling, a maximum amount they're willing to spend. They can buy fewer shares or they might buy more if circumstances are just right. This is a common feature of these programs. They offer flexibility. How will they actually do it? Appian isn't limiting themselves to just one way of buying back shares. They can do it in the open market, meaning buying shares as they come up for sale from investors on stock exchanges. They can also make private deals, which can sometimes be more efficient. They might even use strategies like accelerated share repurchases, which is when a company exchanges cash for a large number of shares up front, with the final number of shares adjusted later based on market prices. Rule 10b5-1 plans are also mentioned, which are pre-arranged trading plans designed to be a defense against accusations of insider trading. It all boils down to having many options to get those shares back. Accelerated share repurchases, which is when a company exchanges cash for a large number of shares up front, with the final number of shares adjusted later based on market prices. Rule 10b5-1 plans are also mentioned, which are pre-arranged trading plans designed to be a defense against accusations of insider trading. It all boils down to having many options to get those shares back. So when will they actually buy? That's the million-dollar question, or rather the $10 million question. It's going to depend on a bunch of things. First, their own cash situation. How much money do they have readily available, or what they call liquidity? Then they'll be watching the overall economy, and the stock market, general business and market conditions are key. They also have to consider any rules or limits related to their existing debt, known as debt covenant restrictions. And finally, they'll be looking at other places they could invest their money to make sure buying back their own stock is indeed the best use of their funds at any given time. This isn't just about buying stock. It's about smart capital allocation. Now, let's put this into perspective. When a company buys back its own stock, it can have a few effects. For one, it can reduce the number of outstanding shares. If the company's profits remain the same, but there are fewer shares, then earnings per share, a key measure of profitability, can go up. This can often make the stock look more attractive to investors. Also, a buyback program can be seen as a signal from management that they believe the company's stock is undervalued by the market. It's like saying, we're confident in our future and we think our shares are a bargain right now. Appian is a company that focuses on providing a platform for building enterprise applications. Think of it as a toolbox that businesses use to create custom software that fits their unique needs, often to automate complex business processes. They compete in a space with other major tech players, and their ability to innovate and manage their financial resources effectively is crucial. This share repurchase program, therefore, is an interesting move within that broader competitive landscape. It suggests confidence in their platform and their future earnings potential. Enough so that they're willing to invest in their own stock. From a Warren Buffett style perspective, you'd want to see this buyback happening when the company's stock is genuinely selling for less than its intrinsic value. If Appian's management truly believes they can generate more value for shareholders by buying back shares than by investing in new projects or paying down debt, then it's a smart move. We'd need to dig into their financial statements, which aren't detailed in this specific filing, to see if their cash flow supports this and if their valuation metrics are indeed compelling. However, the commitment of $10 million indicates a solid belief in their ongoing business. Looking at the bigger picture, this type of announcement from a company like Appian is often a precursor to other strategic actions, or perhaps a signal that they've achieved certain financial stability or milestones. It's not just about the money itself, but what it represents for the company's confidence in its own operations and future growth. Alright, that's our breakdown of Appian's latest announcement. What's your take on this share repurchase program and what it could mean for Appian's stock? Do you think it's a smart move or just window dressing? drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community, linked in the description below, where we discuss these things in real time. Thanks for watching, and we'll see you in the next Decode.